Namaste everyone and welcome back to the viral context. If you have ever tried to buy a flat or a piece of land from an NRI relative, a friend or a neighbor, you know exactly how painful the paperwork can be. For decades, the biggest hurdle wasn't the price or the location. It was a three-letter word, TAN. Until now, a regular Indian homebuyer was forced to act like a corporate company, applying for a tax deduction and collection account number just to close a single deal. It was confusing. It led to massive tax notices for innocent buyers, and it honestly made people afraid to buy NRI properties. But today we are diving into a game changing update from the Finance Ministry. As of February 2026, the TAN requirement is officially being scrapped for most residential deals. In the next few minutes, I am going to explain exactly how this works, why the government finally made this move, and how it's going to save your thousands in legal fees and months of stress. If you are a buyer or an NRI seller, this is the most important update of the year for you. Let's go into the context. So, what is the official source of this massive news? On February 1st, during the Union Budget 2026 presentation, Finance Minister Nirmala Sitharaman proposed a critical amendment to Section 397 of the Income Tax Act. As reported by the Economic Times, the government has realized that requiring a TAN for a single property deal was an unnecessary burden. Think about it. A resident buyer is not a professional tax deductor. They are just a regular citizen buying a home. Starting from October 1st, 2026, the law will officially allow you to deposit the TDS for an NRI property sale using your regular PAN based challan. This is exactly how we already buy property from resident Indians using a simple form called 26QB. By removing the need for a separate tax deduction account number, the government is cutting out a huge bureaucratic middleman. This doesn't just reduce paperwork, it reduces the time it takes to complete your sale. Did registration by weeks. It's a welcome shift toward trust-based governance, making NRI deals as straightforward as any other transaction in the market. Now, to truly understand how big this update is, we have to look at why the old system was such a disaster for regular people. You see, before this 2026 reform, the law treated a common home buyer exactly like a multinational corporation. When you bought from an NRI, you were legally required to get a TAN. But for most of us, buying a home is a once in a lifetime event. Why should you have a registered for a permanent tax collection account number for a one time transaction? Once you got the TAN, the nightmare didn't end. You had to file quarterly TDS returns, specifically Form 27Q. If you made a tiny technical mistake or missed the filing by even a few days, the penalties were brutal. 200 rupees every single day, which could quickly add up to thousands. Because it was so complex, buyers had to hire expensive tax consultants and CAs, adding 20 to 30,000 rupees in extra costs to their home purchase. This procedural wall actually made Indian residents afraid to buy NRI properties. It created a bottleneck in the real estate market where NRI owned homes were harder to sell. Not because of the house, but because of the tax headache. By scrapping TAN, the government is finally admitting that a home buyer is not a professional tax office and they deserve a simpler way to comply. To truly understand why the Indian government is simplifying NRI tax now, we have to look at the bigger picture. In 2026, we are witnessing a global race to attract talented citizens and investment back to home soil. Look at the European Union. In January 2026, the European Union launched a massive 5-year strategy focused on talent partnerships. They are actively digitizing and simplifying tax rules for their diaspora to make it easier for people to work across borders and manage their assets back home without being buried in local paperwork. India is playing the same game. By scrapping the 10 requirement and simplifying NRI property sales, India is removing the tax friction that used to stop NRIs from engaging with their home country. Just last month, India and the EU agreed on a joint strategic agenda to facilitate easier mobility for professionals. Whether you are in Dubai, London, or Berlin, the message from the 2026 budget is clear. The government wants to make it as easy for an NRI to sell a house in Delhi as it is for someone in Mumbai. We are moving toward a borderless tax system where your nationality doesn't define how much paperwork you have to do. So let's talk about the real world impact. How does this move from a TAN based system to a PAN based system actually change your life? First, let's look at the timeline. In the old system, you couldn't even start the tax process until you applied for and received a TAN. This often took 7 to 8 days of just waiting. By using your existing PAN card, you can now start the TDS payment the same day you sign the agreement. This effectively cut 1 to 2 weeks out of the entire property registration process. Second, let's talk about the wallet. Because the old TAN based filing was so complex, almost every home buyer had to hire a chartered accountant to manage the quarterly returns and the compliance. This would typically cost you anywhere from 20 to 30,000 rupees in professional fees. With the new PAN based form 26QB, the process is so simple that most buyers can do it in themselves online in 15 minutes, saving the extra expense. Most importantly, it removes the risk of legal notices. Many buyers used to forget that after getting a TAN, they were legally required to file quarterly returns even if they only had one transaction. Missing those filings led to automatic notices and daily fines. From October 1st, 2026, the trap is gone. You pay the tax, you get the receipt, and you are done. No more long-term compliance tails following you for years after you have bought your home. Now that you know the why and the global context, let's get practical. How do you actually execute a property deal under these new rules? Here is your 3-step action plan for any deal after October 1st, 2026. Step 1. Verification. Before you sign the agreement, ask the seller for a formal declaration of their residential status. Remember, the 20% TDS only applies if they are technically NRI. Sometimes people living abroad might still qualify as residents for tax purposes. So check their travel history or ask for a simple declaration. Step 2. The PAN only transaction. If they are an NRI, forget about the TAN office. You don't need to visit a government portal or wait for a new number. Simply ensure your own PAN and the seller's PAN are ready and active. This is only ID you need to handle the entire tax process. Step 3. Filling Form 26QB. This is the secret weapon. Previously, Form 26QB was only for resident sellers. After October 2026, the government is expanding this simplified challan come statement or to NRI deals too. You just log into the e-filing portal, fill in the property details, enter the PANs and pay the TDS. No separate quarterly returns, no complex accounting. You pay it, you get your certificate, and you are 100% compliant. It's the simple. So, what is the final verdict on the 2026 NRI tax reset? It is simple. The era of treating regular home buyers like criminals or corporate accountants is finally coming up to an end. By scrapping the mandatory TAN requirement, the government isn't just cutting down on paperwork, they are acknowledging that trust is the foundation of a modern economy. If you are planning a deal, just remember the magic date, October 1st, 2026. This is when the heavy lifting ends and the simple PAN-based system begins. Here at the viral context, we doesn't just report the news, we want to give you the deep dive you need to protect your wealth and make informed decisions. If you found this breakdown helpful, please do us a favor, hit the like button and help the YouTube algorithm show this video to other people who might be struggling with the NRI tax confusion. Also, don't forget to subscribe and hit the notification bell. We are going to be tracking every major change in the budget 2026 from a new capital gains rules to the digital asset disclosure. So you never have to wonder what the fine print actually means. Stay tuned